All right, welcome back to another episode of the Black Bullion Show. Earlier this week, I spoke about silver and gold's rise this year and the Fed's inability to keep a lid on inflation pressures. Now, when you take a look at the recent bond auctions and their inability to attract enough demand, you have to start wondering when the Fed will continue to increase their net purchases of these bonds. You know, we have less foreign and private demand, so their options are pretty slim. Plus, when you see gold catching investor attention like it has recently, you know, that's probably not a good sign for the future of, I should say, the near-term future of bonds. So, will this attention on gold and silver last? Will bonds receive renewed favor? Find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so we're going to start here, guys. A scenario to end gold's bull run looks increasingly unlikely. That comes from Invesco via Kitco News. So let's start with this highlight here. Ledger said that for the gold market to lose its current momentum, the U.S. economy would have to overheat enough to force the Federal Reserve to drastically raise interest rates, which in turn would boost the U.S. dollar. A rise in interest rates would also put the current economic recovery, which is benefiting from low interest rates, in jeopardy. Ledger said that it would be difficult to identify a catalyst that would bring about such a scenario at this vulnerable stage of the nascent economic recovery. In our view, the Fed seems determined to protect this budding upturn by keeping interest rates low for the foreseeable future, he added. So, demand helps keep yields lower. However, we just wrapped up the 10-year auction this month, and an eerie trend seems to be forming right now, guys. Check this out. 10-year treasury yield rises to 0.70% after weak showing for benchmark debt sale. Dealers tried to bid up the yield before the auction to attract buyers, which would cause the yield to fall afterwards. But it's just like, it didn't really seem to happen, just given this title here. So let's tap in and see what we can figure out here. What's driving treasuries? The Treasury Department's sale of $35 billion of new 10-year Treasury notes struggled to draw sufficient demand as analysts cited a lack of concession, a process whereby broker-dealers push yields before the auction to ensure a successful sale. With Treasury auctions being larger than they have ever been, slightly higher yields have been necessary to draw the interest of bond buyers. Yields were initially lower in overnight trading after AstraZeneca reported they had paused the development of its Roni's shot candidate after one of its trial participants had an unexplained illness. Well, that's not good. But the Haven rally later petered out as equities recovered. Following the NASDAQ composite correction in the past 3 days, in which it dropped 10% from a record high. Just going to skip this part. What did market participants say? The long end of the curve has been very sensitive to these increases in supply since the spring. And we expect this trend of relatively sloppy auctions in the past, or in the absence of significant market concessions, to continue, said Thomas Simons, senior money market economist at Jefferies. So, what's with all of this supply? You know what? Maybe a guy like Ray Dalio can provide some insight into this. So, let's see here. According to Dalio, regardless of who wins the upcoming presidential election in the United States, government spending will likely increase. To fund it, he believes that the government will sell bonds. Quote, "We'll have to sell a lot of bonds to the world," Dalio said. "Americans will not have the capacity to buy all of the bonds that will be sold." Now, this will be a hard pill for our government to swallow. We had a huge sell-off of bonds from foreigners, and fewer and fewer people want our treasuries, especially foreign investors, as time moves on. And also, take a note here. Dalio says holding government bonds now is crazy. To Ray Dalio, founder of the world's largest hedge fund organization, investors would be crazy to hold treasury and other government bonds now. Reason? They don't pay much in interest. Quote, "This period, like the 1930 to 45 period, is a period in which I think you'd be pretty crazy to hold bonds," Bridgewater Associates co-chairman Dalio said in an interview with a Bloomberg News webcast. He continues, "If you're holding a bond that gives you no interest rate or a negative interest rate, and they're producing a lot of currency, and you're going to receive that," he declared, "why would you hold that bond?" Exactly. So, Mr. Dalio, you haven't been levying too many kind words for bonds recently. So what have you, Mr. Dalio, been buying? Well, let's see. Oh, Bridgewater hedge fund boosts gold ETF investment to over $1 billion. This was written on August 13th. That last article was written April 16th of 2020. So that was his outlook back then. This is what his actions are recently. Hedge fund Bridgewater Associates raised its investment in gold-backed exchange-traded funds by a third in its second quarter, buying the equivalent of 170,000 ounces of gold, worth $340 million at current prices, a regulatory filing showed. The move is a part of a wider rush among investors to buy gold, which they hope will hold its value as the Ronies upends markets and pushes down returns on bonds. Now, I really like how that last sentence basically just summed up this video very nicely. Gold versus bonds. And Dalio basically said, let's move these bonds away. Let's get some of this gold. Article just basically encapsulated that right there. Now, there's a great saying, guys, that goes, follow the money. An even better one is bad money drives out good. So don't get caught holding the bag, guys. Trade it in instead for a bag for a stack. All right, guys, thanks again. Hit that like button, hit that subscribe button. It's Black Bullion.